Is the AI market finally popping? This is what the overall market wants you to believe, as in the past 24 hours, we've heard of various news about companies like Alibaba saying that there is an AI bubble in the United States. We're also hearing reports that various companies are walking off from some data center solutions, mainly Microsoft, which can kind of show some indications that the AI market is slowing down. We also have heard other things coming out from China right now, and we're going to cover all this in today's episode. But too long, don't watch. I believe there's always two sides to the story, and the negative side always seems to be the best clickbait. So on today's episode, I want to kind of take more a look at the positive side and maybe some of the things that investors might be missing. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so we can see a couple of stocks today have seen quite a pull down. Our favorite semiconductor stock here, Nvidia, was down roughly 5.7%. We also had TSMC down roughly 4%. And the company that deals with kind of data center infrastructure was down roughly 11% on the day. That was Vertiv, ticker VRT. So a lot of things are happening. But I want to say the first big thing was there was an analyst at TD Cowen outlining that Microsoft is abandoning two data centers that were expected to be used for AI solutions and for AI servers. And this is kind of showcasing that, hey, look, if Microsoft is going to be walking out of these data center capacities, is this an indication that the AI market is really at the top? So I want to say there's a few things to remember, and that TD Cowen analysts actually even shared some information here that, in their view, the pullback on new capacity leasing by Microsoft was largely driven by the decision to not support incremental open AI training workloads. However, we continue to believe the lease cancellations and deferrals of capacity points to data center oversupply relative to its current demand forecast. So for those that do not remember, we do have a Stargate supercomputer project that was kind of announced by OpenAI, by Oracle, and by SoftBank. And this Stargate project is pretty much massive supercomputers or massive data centers to help OpenAI do more training. Now, this is expected to be a $500 billion investment over the next 4 years. This doesn't mean $500 billion in capital expenditure. It's some form of total cost of ownership of about $500 billion, which is different from capital expenditure. But regardless, it's still a big, massive number. Now, OpenAI actually teamed up with two other players outside of Microsoft. And the main reason is I think Microsoft was thinking that OpenAI was asking for too much. So Microsoft was like, hey, look, we used to give you an allowance. Now I want you to go find a rich uncle, a rich brother, a rich grandfather, whatever. Go find yourself a sugar daddy and try to kind of build that AI compute capacity other ways. So like that, us as Microsoft shareholders and as a Microsoft company don't take a massive risk of overbuilding, right? So I think Microsoft, when they did this, it was a way to kind of de-riskify themselves. I don't even know if that's a word, but to de-risk themselves of heavy investments. So OpenAI ended up finding some other companies that were willing to take these investments. So Microsoft slowing down here in kind of these data center capacities is because originally, based on these TD Cowen's and their thoughts, is originally they were going to use these data centers for OpenAI. But since they're no longer going to really participate too much in kind of the future training of OpenAI, there's no need for them to keep them, right? And it's not like these data centers are most likely going to stop. In my best guess, it's just going to change hands, or the capacity is just going to go elsewhere, right? We're going to see that capacity is moving from Microsoft to the Stargate project. So I don't believe that's necessarily the sign of an AI bubble. I think it's more of a de-risking move for Microsoft and not necessarily a signal of the AI bubble or an AI bubble bursting, right? I mean, we've heard from various clouding companies that if they had more capacity right now, they would be able to grow at faster levels. So that's the first thing, right? The kind of overall data center slowdown. And again, I believe this is more noise than anything. Now, before we go any further, I definitely want you guys to show some support and go to whatthechiphappened.com for daily semiconductor news about the semiconductor and AI market, all completely free. The link is down below. Now, there is another type of topic that is kind of happening around the AI market. And there in China right now, there are some reports that the China National Development and Reform Commission have introduced new energy efficiency regulations targeting data centers. These rules are aimed to reduce carbon emissions and promote the use of chips with higher environmental standards. Supposedly, one of the chips that wouldn't meet this standard is the H20. So the H20 is designed for the Chinese market under US export controls and does not meet China's new energy efficiency standard for data centers. And this could jeopardize roughly about $17 billion plus or minus a few $1 billion in annual revenue for Nvidia. And this is kind of creating more pressure for Nvidia. This revenue is about 13% or so of Nvidia's total revenue right now. So obviously more headwinds here to kind of impact the overall stock. Now, if I may say, and I may say, United States is definitely one of the leaders in the AI space right now. And one of the reasons is because China can't have the most advanced chips. Obviously, they have the DeepSeek moment, right? They have their DeepSeek company. But if technology continues to innovate as it does, the chips continue to get better. I do think the United States is going to have a better kind of gap between some of the performance and some of the models as we go on in the upcoming year. So for China to be able to kind of continue to maybe not continue to maybe shoot themselves in the foot here by eliminating the H20 from their market, I believe this is something that's not really going to happen because I do think China also wants to dominate in the AI space. And the H20 is definitely helping them, at least in certain use cases. So it's going to be interesting to see where that goes. Recently, there were also some reports that NVIDIA is going to be using the H20. It's going to create a new H20E, which is going to be using HBM3E memory, which in theory should be a little bit more efficient in performance. I don't know the current specs on this, but there could be a probability that with this HBM3E, it might be able to bypass these new kind of restrictions on power efficiencies. But that's something to kind of keep a closer eye on. Again, I think China needs the H20 for them to continue to develop. Even though they do have a lot of domestic players with their Huawei, they do still need NVIDIA chips to continue to meet that demand. Now, obviously, any slowdown in data center supplies in forms of different markets can impact TSM, as TSM is kind of the player that builds all these chips and every other type of component that goes into these or other companies that deal with the AI market, right? So I do believe that's another reason TSMC is down. It's just in forms of collateral damage because a lower demand for NVIDIA chips means lower revenue for TSMC. Now, the next thing I want to talk about is about 24 hours ago, Alibaba's chairman warns about potential AI data center bubble. Now, this is interesting. I mean, I don't see us being in a bubble of overall compute, but one thing that we might be in a bubble is in a bubble of NVIDIA's Hopper architecture. And the reason being is Blackwell is such an amazing chip that the Hopper architecture is selling pretty cheap in the cloud market. So if you're just kind of a cloud store provider that's building only on Hopper platforms, I think you're going to have a very hard time. And we can kind of, I mean, Jensen Huang mentioned it perfectly himself. Right now, the Blackwell is 40 times the performance on Hopper, straight up. Pretty amazing. And I've said this before. Somebody actually asked why I would say this, but I said before that when Blackwell starts shipping in volume, you couldn't give Hoppers away. And this is what I mean. And he calls himself the chief revenue destroyer. Now, by Jensen saying this is, hey, look, the Blackwell is such a better product that even if you have all these hoppers, they're going to be You can't give them away for free. So the capacity, the cost, the kind of clouding costs or charging per hour on these GPUs are going to be pretty low, as the standard is now Blackwell, and Blackwells are kind of ramping up. So I do believe there might be a bubble in forms of maybe the Hopper architecture. And I think in the upcoming iterations of Blackwell and NVIDIA's chips, companies are going to maybe be a little bit more how can I say, a little bit more, not conservative, but a little bit smarter on when they purchase things and when they start to prepare for the next iteration. But as long as you're able to continue to give these types of performance boost, right? If you have a phone and the next phone that came out a year is 40 times better, most phones are about 10% better in performance. That's about zero point 0.1 that's a 1.1% better. This is 40x better. That makes a huge difference. And as long as NVIDIA is going to continue to see that, then you are going to continue to see maybe some pullbacks or some lesser demand on the older chips. But as AI continues to innovate, the amounts of demand for the Blackwell platform for both kind of the cloud server providers and their customers, in my opinion, is going to continue to grow. So I don't think the United States is in a bubble, but all these news coming out in the kind of few in the past 24 hours or so is really scaring investors. And hopefully, maybe I'm not trying to be the hopium drug here, but at least try to see the other side of things. So why maybe some of these things are happening and why maybe it might be more noise than actual absolute truth. Another final thing I would say is in the overall United States right now, we are kind of very volatile due to various tariffs news. And I do believe later today, or maybe as I am recording, we are expected to get some more tariff news. And that creates even more volatility for the tech space in general. So yeah, I mean, I'm not too worried about NVIDIA. If I didn't have a position, here would be some, in my opinion, attractive levels, as this company is trading at very cheap values based on forward expectations. And again, it's all based on expectations. If you don't expect the AI market to grow, then maybe this is not the stock for you. But maybe later today or tomorrow, I will take a closer look at current valuations. So take care, have a good day, and see you all next time.